Monday, welcome back. Monday, June 16th. Final hour session, 3 to 4 p.m. Let's get started. Key levels to watch today. We are floundering around 6,000 handle, 6028 as we're seeing price live. We poked the 6050 level again today. That is just back to the Wednesday highs last week. I think we had Friday was a sell-off. Thursday, we got up to 6050. We had 6059 on Tuesday. Let's have a look at the key levels here. Today's daily profit play, right back into the center price for those that were hanging on to it for the day. The blue lines were the levels that I was in, so took a nice little 28 and 20% profit. It was kind of a late morning, early afternoon trade, but price cooperated nicely for a Monday. If you're still hanging on to it, where's Larry at? Larry making some money today. Where's Dean at? Dean, you holding out for that $100 today? Most likely. The trades that I took this morning, let's go to this. Just put on some trades for Dutch Brothers earlier. Put a trade on for SPX this morning. And that trade is now down. Yeah, I mean, it's essentially a full profit. So $1 is down to 10 cents and 70 cents is down to 5 or 10 cents. So you're getting most of the profit out of there without hanging on to it till the rest of the day. That's the, eliminating the final hour of gamma risk, which to me, capital efficiency, just take the profit. So anyway, good win on daily profit play. Hopefully we have another easy day tomorrow as we head into Wednesday's Fed. Market news this week, highlighted this in a couple morning sessions. We do have Bank Japan overnight. I don't know if we're going to see any big move in currencies today. Things were pretty quiet for the most part. New Zealand dollar and Aussie dollar quite strong. Swiss and yen weak. Dollar also weak. I certainly don't mind seeing Aussie and New Zealand head higher. Let me check something really quickly here. I'm going to log into my FOREX account. There we go. All right, so watching New Zealand Swiss making a bit of a move. Okay, let me go Aussie Swiss. Aussie Swiss, you just missed my pullback level. CAD Swiss, lowered the cost basis a little bit on CAD Swiss. Euro Swiss, still looking at a level around 92.50 to get filled. New Zealand Swiss, this one's getting closer and closer to breaking a trend line. New Zealand Swiss daily time frame, in a little bit of profit on New Zealand Swiss and Aussie Swiss, but still want to see some more upside. I want to see if we can get back to this support level, get into this 200 moving average, but I'll be watching to see if we get some wave cycles here. This New Zealand dollar, New Zealand Swiss. So I'm looking for some type of 3 to 5 wave move. There's some really nice structure back around 5,200 on New Zealand Swiss. So if I can hold out to a run maybe to 5,000-ish, 60.25 my center price with daily profit play. That chart line was not good. Okay, we'll keep an eye on one. Going back into currencies, New Zealand Swiss there, currency strength. What else? Dollar Swiss, just off the lows. I think it might have been filled on dollars actually. Just got filled at the bottom around 80.75. So now my cost basis is 8,500. So dollar Swiss cost basis 8,500. I'm trying to look for a run back into this inefficiency around 87, 87.50. Turn this into a nice little, as long as we can come back and find this pocket here. Swiss National Bank is looking to cut rates this week to 0%. So even if the Fed kicks the can down the road and doesn't cut until September, that's still another 4.5%, 4.25% that I'll get on my dollar Swiss swap. Even for a price that's not going anywhere, break even's 85. I'm down pips. Obviously, I'm down 320 pips, 350 pips of direction. But if we get a move up, if price just stabilizes, gets on the right hand side of the trend line, hopefully start to see a move to the upside. Any charts, any currencies? There you go, Dean. Got your $100 today. Good, man. Dollar CAD still heading a little bit lower. I do want to keep a close eye on this one for the 34, 33, 3,200 support. If we come back to those levels, I'm going to buy it. So I'd like to see some inefficiencies. If it is going to test those support levels, we're talking, 2022 lows that hopefully would hold as some pretty solid support. I guess I was going to say, like, is it possible that the dollar CAD does something like this? We come in here and we work our way down to these lows, pull back again, chop around. Is it possible that the dollar CAD heads lower? I mean, if oil price spikes up to 130, 140, 150, then that's very possible. So, I mean, even if I like the trade enough, I think I'm still going to buy it around 132, but I've got to be prepared to possibly dollar cost average into this thing to 122 to 120. That would have to be that'd be an incredible move on oil. I don't think we're going to get that. You can see a lot of this spike did fade, so we got up to 77, almost $78. We faded a decent amount. This was up like 40 some percent from that $55 low. That was up 40%, and we have quickly faded around 10% in the last day. So again, the Middle East conflict was just a flare up that got the market excited about something, squeezed in oil. The Fed is likely going to stay put again. Let's see what Powell's message is on a Wednesday. Market holiday on Thursday, or U.S. holiday on Thursday with Juneteenth, so markets are closed. And then we'll see if the market wants to come out swinging for some type of move on Friday. We're wrapping up the quarter. We're wrapping up the month. If the Fed doesn't really say anything that the market, likes or dislikes, it just stays pretty neutral. It could just be a quiet week. So the reason I wanted to highlight key levels, I had mentioned this last week. There's a monster gamma level at 5905 that typically the way the timing works is that acts as a ceiling. And so 6200 is like if we are hedging through this 5900 level, which we're trading obviously above it right now. If we're seeing hedges above 5905, then there's room for those hedges to continue to play out and drift into the 6150 to 6200 zone that would test all-time highs. SPX all-time highs, I believe, are around 6140. I've got a high there at 6145. So is it possible that we have a squeeze to 6200, 6150, maybe? I did say that's probably the more painful trade right now than it would be for a correction. I personally would like to see a correction. Technically, I'd like to see a correction. My workspace here would show potential corrections. I did this morning. If we go to the SPY, take a look at these just index trades. So SPY, my zigzag is looking for a topping pattern. My momentum indicator is showing a lot of divergence. So we have prices making slightly higher highs, big disagreement with the momentum. Doesn't mean it's rolled over yet. Doesn't mean that this structure is breaking. Doesn't mean this thing is ready to confirm, but it's getting close. I mean, basically last Friday was a bit of a, fake, and today's right back up. But if we end up going lower for the week, this market could go a lot lower because it could have been, showing its cars on Friday. Price pulled back today, but didn't break any highs. And then if we end up breaking, Friday's low, I would think there's room to fall. So I do think that this low from Friday is really, really key this week. If we break this low, we probably have another 3, 4, 5% as far as correction goes to the downside. Okay. So to me, I think it's going to be important that the bulls hold this level this week. Even with the Fed on Wednesday, market holiday Thursday, if price is not breaking highs and just floundering around all week with no real direction, enjoy that while you can. But then, of course, we're wondering, is the market going to break and go back to 6,100? We're going to break this 59.65 low from last Friday and sell off aggressively. I still think that by the end of the month, if this thing starts to roll over on the right-hand side of the trend line or roll over with some downward pressure, 5,900 is not that far away. It's about a 1+% move to the downside. It can certainly get there. If we go down to 59.05, we're talking about a 2% drop. Okay. I've been looking at a 3-5% correction. It's a little bit deeper if you talk about that filling U.S.-China trade war agreement or the trade agreement gap, which is all the way back down here. We could test this level at 57. It's actually easier to go top to bottom here to see what the correction would be. So that would be a move of around 5%. We fill the gap entirely around 6%. Even pulling back into some of this chop in here, we're talking 4%. So between 4, 5, and 6% corrections. Again, to me, that hinges on if we can break this low from Friday, right? So if we break the low from Friday, I'm looking at 4, 5, and 6% corrections. Not that hard. It could come quickly. We could do this over the next couple of weeks. We just kind of roll over and have some directional movement by the end of the month, end of the quarter. But I think as far as that, 59.05 major gamma level and ceiling in the market, just based on option flows, if we are going to come back and kind of pin pin 59.05 or get below 59.05, just don't be surprised. I think it's very likely going to happen. So, and again, if I'm wrong, this is what hedging is about. If 59.05 is not a ceiling that's going to pin price, then there's hedges to the upside where this thing can melt up, and that to me is the pain trade. So many people are not participating in this run. So many institutions and hedge funds are not participating in this run. And if you look at this just from the technical side, I mean, let's say that we get to the highs. Okay, let's say we get to the highs right here. Okay, so there is your reward. If we just get back to the highs, if we pull back and fill this U.S.-China trade agreement gap, so this is, I'll box this in, I'll just put an arrow. So if we go to all-time highs, let's go blue or green arrow. Let's go green. Okay, so if we go from current price to all-time highs, there's your run. If we go from current prices down to this trade agreement gap, let's go to 58, let's go to 57.50, let's go to 57. Which arrow is larger? Obviously the downside. So for near-term positioning and even near-term profits, I almost think that it is better positioned for a little bit of a correction. Okay, and that's just saying based on a big correction to a rally back up. By the time the market is getting back to these highs again, there's typically a pause or a pullback. So to me, I know the market may not pull back. Okay, but if we do test this high, we're likely going to pause, most likely going to correct. I just don't know if I'm going to time it exactly with June expiration, right? End of June, end of quarter, end of month, 59.05. But if near term this market rolls over, we can get to 58, 57.50, 5700. The reward is actually slightly bigger to the downside than it is the upside. And obviously, if it goes up first and then down, that's fine too. You're just looking at some kind of tight stop loss areas if things turn to the downside. So, because of today's price action, I still think we just have to zoom in. Zoom in. This is a flirt of that trend line. I went back and connected the dots on 4 levels of support. So this is May 7th, May 23rd, May 30th, June 5th, and we broke the level, retested, broke again with fresh lows on Friday. But today's gap up. We're not breaking highs. So any questions? This makes sense. This 59.66 low, 59.65 low from Friday. This is going to be a key level. If we take out this area, if we take out this low, there's room to fall. We take out this high, that's fine. I just think we're going to make like slightly low or slightly higher highs. Like we're just going to poke higher, and it's just melt up, melt up, melt up, melt up, melt up. If we actually break the lows with some conviction, then we could have some, a little bit more volatility, a little bit faster selling. I'd like to see a little bit of a pop in the VIX for some of the premium that I'd like to sell, some of the cash I've sitting on the sidelines. So, me to deploy a bit more cash, I'd be happy to. Most likely trading some indexes, some ETFs, and maybe a couple of stocks here and there. But let's see what happens this week. Type in where yes, that makes sense. 59.65 is last Friday's low. We break that level. That means we're taking out a low. Probability remains high that if we take out the low for the week of last week, that we stay there and continue to take out the low. So if you take out a low, you're unlikely going to take out the high. If you take out the high, you're unlikely to take out the low. Last week was a bit of a whipsaw, right? Because we went up on Tuesday to this high, and that was the high for the week. We took out the previous week's high, okay? But, well, I take it back. It didn't take out the low for the week. So we broke the high of the week right here. We did not take out the low, right? So same thing. It's if we don't take out the high this week, we end up sweeping the low. Most likely, this is the high that's going to stay in place, and this is where the market's able to go. We'll see if it rolls over. Okay, Josh coming in with a question. American Tower has been kind of stagnant the past month. Let me take a look at it and see if it pops up on my pinch point scanner, see if it's ready for a trade. So I sent out an alert today, JAZZ, little jazz action today for my pinch point scanner. Ended up having a trade right in here, priced out pretty well. I have a $4.95 debit for a $10 max profit, so it pays 1-to-1. And I'm looking at about a 30 to 50% take profit on that one to let the broker kind of auto close me. But prices out pretty well on JAZZ. We've already gone through a lot of these stocks. Some of these are a couple of new ones today, but we've shrunk from 28 stocks in the go zone to 23. And a lot of these stocks were already in. Currently, pinch point, I have 28 trades. In total in the service, we've closed out 5 of them. 4 for winners. We took 1 partial loser. and put in a new trade today on JAZZ. Put in a trade last week on Dell. Put in a couple trades on Nike. Put in a trade on Schwab, RKT. ULS, SEIC still have not filled yet. I'll get to your AMT in a minute there, Josh. Let me just double check my pinch point. So ULS not filled yet. SEIC still not filled yet. So those are just pending orders. Let's go to AMT. See if it pops up. So AMT is in my pinch point scanner in the go zone. Let's have a look. So AMT is looking for a bullish opportunity. This is looking to be break up. We'll go into the volume chart. Pretty expensive stock, but very range bound between about 217 highs and 212 lows, which for a stock that's that expensive, that's a pretty good pinch if you ask me. So let me have a look at it here. Yeah, I mean, there's a pretty solid range in this one. If you go to AMT, there's clearly some range levels. If you look left on the chart, we could go down to 201. We could go up to 234. I do think something's going to happen on the stock. So it is looking pretty good. Let me see if I can find a trade. It really depends on the option pricing. It depends on the strikes. So let me see here. I'm pretty sure I priced this one and we didn't like it because it could have been like 5 or 10 wide, but let's have another glance. So AMT earnings on the 29th, August 15th to September. I'll probably go out to September expiration. Move wise, I mean, a 15 to $17.50 move. Now it depends on the option strikes. So this is probably why I almost guarantee why I didn't take the trade. So we're expecting about a 1750 move as far as market makers are pricing out, this current option environment. So we're at a 23 IV rank, looking at like a plus minus 1750. The strikes are only they're $10 apart. I don't have precision to trade the way I want to trade. So it's an expensive trade. If I were to, buy the 220 and buy the 210, I'm paying 1650 for a 1750 move. No thanks. I'm not going to take that trade. Now, personally, it's like I don't mind selling premium, but if we went $17 up, we'd be up to 230. Well, if I buy the 230, that's essentially a break-even trade. Okay, if I went $17 lower from here, that take me down to like 196. That's just below my put. So if I did this trade, I'm paying almost $11 to make maybe that's not even right. Let me sell this. Sell this one, go 10 wide. Well, hang on a tick. $17 from current price would be 230. I mean, it's possible I turn a 386 into a profitable trade, but I definitely have to go out long enough because the way that this trade makes money is most likely the time is going to have to be a factor. So the setup is really good. We've got highs around 233. So if I get to the 233 level, which is breaking recent highs back in April of this year before, which is kind of crazy. AMT was up right after Liberation Day. That's kind of nuts. This stock was up and then dumped very, very hard. If you take a look at the stock, so we dropped about 16% right around Liberation Day. The bottom was on the 7th, 8th, 9th, like every other stock was this year, but it has gone pretty much nowhere. So I look at this as, well, I mean, it looks kind of good. So either the pinch is happening here and we're making lower highs and higher lows, and this thing's going to continue to narrow, or even if we have a squeeze up to 235 or a push down to 197. So I guess if I took the trade, like the good thing is, symmetry wise, I get more reward than risk. Turning a 391 into maybe a $5, $5.50 credit could be very doable on this trade if we get a decent directional move. Going out to September allows there to be some type of drama in the markets. If we have the market turns hard in July or turns hard in August, or maybe we have a summer surprise, nobody really knows. I actually don't mind this trade. Let me go back and see. I mean, last time we had it, I mean, it's likely a mover. I'm going to take this trade. Hopefully I can get filled here for less than $4. I'm going to try to take this at 391 and I'll penny my way up to it. So Josh, thanks, man. Hey, by the way, are you in my pinch point scanner? You've got to be for this to be on your radar. I would assume not a lot of people are watching AMT. So I'm going to try to get 391 for this trade. Hopefully I can get filled here for less than, now it's trading 396. Hopefully less than $4. Now it's trading 401. All right. Open interest, we have a decent amount, so it's pretty liquid. $3.93 not filling. I'm just going to go by 5 cents now, so $3.95 and $4. $3.95 not filling. $3.99. Trying to get a little bit of generosity from the mid price, not filling. Now it's at $4.05. Son of a biscuit. $4. All right, I'm willing to go up to like 410. See if I get 410, maybe 415. If it's not there, then I'm probably not going to take the trade. 410, 415. All right, final try is 420. Nope. Nuts. Yeah, it did price out really well, but what I don't love is going 10 wide on the strikes. I don't love that. I'm going to cancel the trade. So I like the trade. It sets up well. Unfortunately, the option strikes are pretty crappy. They're 10 wide. September is the only expiration. That's 95 days out. If I went to October, it's still 10 wide strikes. What's interesting is look at the call side. You notice that the call side is 10, 10, 10, 10, 10. That's $10 wide strikes. And then we go 10, 5, 5, 5, 5, 5. So you almost get better precision on the put side. I would like to see if it was $5 wide on the calls and puts, I'd probably try to position this trade so it can fill. But going 10 wide, it just makes it harder to take the trade with the precision that I want. Okay, XLE to sell. I don't know. I think it's just noise. XLE to sell. Not necessarily. If anything, I think this is a buy, Dean. I mean, I've been long XLE since 75. I think this is a great level support, selling some puts. I'm not going to get a ton of premium for it, but I've got a couple trades already in an XLE. So that's healthcare. Must be my XLE's already hit profit. So I'm up. XLV's healthcare, that is up $440. UNH, I played the healthcare space there as well. Bit trickier. UNH is at 306. I'm still down because of it's a ratio spread. But my line in the sand is 270. So actually, no, my line in the sand is 260. So as long as you stay above 260, which right now, based on the expiration that I have, 260 is there. I mean, we can come back and test it, but there's a lot of premium on the stock. Hopefully, we'll not test 260, but if I had to, I'd still own the shares. Let's go XLE. I think XLE is a better buy trade from the lows around 75. I don't know if this is a great setup, but let's say, summer demand, if things are up, I don't know. You see what I'm saying? Like, to me, I just see a lot of support. This is pretty much a range. I'll just box this in here. So if we just box in, this support around 75 up to around 98, I don't really see XLE going anywhere. I really don't. I think this is more range bound. Now, to sell this trade, if I did like a ratio spread in this one, I'm probably going to collect, terrible premium for it. So if I went out 60 days, I say 75 is my support level. 75. So if I buy the 75, sell the 76, or I'm sorry, buy the 76, sell the 75, I mean, I can get $40 on the trade. Do I really want to own the sector? Not really. Not really. Not particularly. So, I mean, if it was $1 or $2, then maybe. So, yeah, I'm just going to stay out of it for right now. It's noise. And I don't know what happened. I mean, oil could turn the corner, go right back down below 65 and 55 and stay in that range. But I'm telling you, like, this little squeeze, oil was a very hated trade for a while. Everybody was super bearish. This is a squeeze that caught everyone's attention. Now take a look at inflation. Okay, inflation has come off the lows. More than likely, based on the readings that we're going to see, we had CPI and PPI last week. We're going to have another round of those in July. I wouldn't be surprised if inflation starts to tick higher, and it's going to continue to kind of reinforce and justify the Fed not touching rates. So the Fed doesn't touch rates in September, or I'm sure they don't touch rates in July. When is the next Fed meeting after this week? So CME, I think we go June, July, September. Is that right? June, July, September. So June 18th, this week, Wednesday, July 30th, end of the month, and September. And that's when your rate cut is likely going to hit. And then again in December, those are the two probabilities for rate cuts, 25 and 25, I would assume. So despite all the pressure, despite what Trump wants to see with the Fed cutting rates, despite the criticism of them waiting too long and being reactive, I don't know. I think inflation is much more of a threat to the consumer than I don't know, higher energy prices into a stock market that's correcting. I think that the labor market is brittle. I talked about this in a session this morning. If we're going to have a recession in the U.S., I think it comes from the bottom getting hurt so badly that Main Street is struggling, suffering, and pissed, and therefore it trickles into everything else. Mainly if I don't know, people start losing jobs. I keep saying that. That's the only way we really have a recession is we have to have like major bouts of job losses. So we keep seeing negative revisions in the non-farm numbers. So coming into July's non-farm at the beginning of the month, are we going to see another bad revision? You go back to let's go 2 Fridays back on here. So here's a look at non-farm payroll numbers. Okay, you go to the graph. See if I can zoom in. The heck, man. There. Oops. That's a little bit better. Okay. So a lot of these have printed since about, this is going into like 2022. About 200,000 jobs were pretty steady there. 2022, 2023, steady. Now, we have been trending lower. Prints, if I zoom in a little bit more, right here. So 139, 125, 177, forecasted 136, right? So if we go to let's get the graph out of the way here. Just go numbers. So non-farm numbers, 126 came in 139, previous 138 came in 177. But this is what I'm talking about. Look at how many red revisions we've had. Of all the, let's see here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 non-farm numbers. We've had 9 negative revisions and 3 positive. So, I mean, we're showing numbers here, but like the trend is down. So we're getting like low 100,000s now. If we start seeing non-farm numbers come in less than 100,000 and we keep getting negative revisions, that is clearly showing a softening in the labor market. It may not be enough to break the market yet, but that's something that we should pay attention to because if we see a weaker labor market, we're going to see a cutback in spending. We're going to see unhappy workers and frustrated workers, and average earnings won't be enough. My concern with this next wave of unemployment or a softening labor market is that these are jobs that don't come back. So maybe that's too early with this AI shift, but I think these are jobs that don't come back in full. So it's not ready yet. The market hasn't broken yet. In fact, this might turn the corner. The markets melt up to all-time highs, and then later the market catches up and says, "Hey, look, we realize that unemployment's rough and the jobs are getting way worse out there, and the market has to adjust earnings, and it could take 6 or 8 months." So I mean, I don't know. You go back to 2007, 2008, you saw the market go up to all-time highs again before it dropped 50+%. So you never know. You got to follow price action. I just know that our labor numbers on non-farm have been getting a little bit softer, as well as the revisions have come out most of the time negative. So just don't ignore that. And if we have on top of that rising inflation or oil is spiking, I mean a big rate of change move in oil. I mean this was up 40%. If we see like a 50, 60, 70% move in oil, people are going to notice. I mean you're almost instantaneously within a week or so you're going to see gas prices be a lot higher. That people see every single day. I just filled up for $3.20. Why is my gas $3.99 right now? People are going to notice that. So it's out there. It's just right now the markets seem to be ignoring it as we're just lingering around this 6,000 handle. Fair? Okay. Any update on the dollar? Not really. I mean, dollar just hanging out at the lows. I think this is divergent. One thing that wouldn't surprise me. So I did want to mention this. SPY. I started going about this earlier, and I kind of got distracted. So this high, lots of divergence on the daily, and hidden bearish divergence on the relative strength. Technically speaking, this should point to a correction to the downside. Not happened yet. We could also come and sweep these highs and then start to correct from there. But that's why I keep mentioning that 5,900 level, 5,905 on the S&P. Here is the SPX, same thing. Lots of divergence on momentum, hidden bearish divergence on relative strength. You go to the NDX, same thing. We're inching higher, big disagreement with momentum and hidden bearish divergence on relative strength. You go to the Dow, lots of disagreement with momentum. A little bit. I mean, we are going slightly higher in prices, but the Dow, we had a big drop in the Dow last week on Friday. The market hasn't responded, quite as high, but not quite overbought territory in the Dow, but still lower highs in momentum, slight divergence, slight hidden bearish divergence on the relative strength. Go to the Russell. Russell, again, disagreeing with momentum. So prices are higher, momentum is not. That's divergence. We have, slightly higher prices. And even with this slightly higher high, we have equal highs in relative strength. It's not quite overbought, but it doesn't have to be perfectly aligned. If we have S&P overbought and the Qs are overbought, the Dow is close, the Russell's close. I mean, they don't all have to be perfectly aligned and correlated. Okay, volatility index. Now let's use a different chart here, but go back to SPY, volatility index. We're trading at 1931. So last Friday, VIX got up to about 22 and faded a little bit. Today, look at your quick readings from the open today. What the VIX do? So in the first 30 minutes of trading, so the 16th, let me go find this morning. So here is 9:30, 10, 20, 30 minutes. I mean, we were down in the VIX and we were up all morning on the S&P. Now we did spend the rest of the afternoon rallying, so we've given back most of those gains. But anyway, VIX on the daily time frame, off the lows. Are we going to see some type of spike to get back into the 20s? Maybe 25, 30. This wouldn't really scare. I don't think this would be like a big volatility event. I don't think this would be like, oh my gosh, run for the hills, bear market type situation. It would just be a little bit of ventilation, allow buyers to come back in at some point, get a discount. 4, 5, 6% seems reasonable. 10% might be get a little scarier. Just comes with higher volatility, but I'd still welcome it. I don't mind having a 4, 5, 6% correction. 10%, you sell more premium. But maybe that spikes the VIX up into the mid 20s, maybe in the 30s. I wouldn't suspect it going too much higher than that, unless this this trade war window is just like blown wide open. Scott Bessent announced we've got, he sounds like Trump now with the tweet. We got big announcements coming. It's like, dude, just stop jawboning. If we have agreements coming, then tell us who they are, what countries are aligning, what are the deals. I mean, the average tariff right now is looking at like a 12 to 14% tariff globally. China's different, dealing with the Eurozone different. Is it case by case? I have no idea. But the whole world of covering our deficits is just not going to happen. I think we're looking for just a little bit of a compromise. But just to keep saying like, it's coming, stay patient, we got it, all these good deals. It's like, what are they? Nobody knows. So, and also that July, 90-day window is up. First maybe 1 or 2 weeks of July, that 90-day pause from April 2nd, April 7th or 9th, whenever it was. April 9th was a pivot. You go out 90 days. I mean, I'm sure Trump could just extend it, So it might be a big nothing burger, or it might be like, hey, what has the U.S. done in 90 days? Nothing. Well, maybe the market doesn't like it, So anyway, I say all that to bring up the dollar. We're sitting at 98. I could see, any type of risk off flows, the dollar might catch a bid here back to 101 or 102. I don't think selling the dollar is a good play. I think this is selling at lows. It might leak lower, but man, all it takes is a squeeze. If this is a crowded trade and it squeezes higher, short sellers are going to get burned hard, and I don't want to be that trader. So I think a relief squeeze is fine, and then reposition for some resistance. I think that to me is a better trade. So I closed out of my euro dollar longs. If we pull back, I might look to reestablish some euro dollar longs. That's kind of it. Coming up here, bro. Come on. Oh, all right. So anyway, I just think the dollar, it's too low. It's too low to sell. I don't like selling lows. I'm also not going to take a chance and buy the floor that might not exist. And I just don't have a trade. I mean, my exposure on dollar is, other than dollar Swiss for positive swap, it's nothing. I close out a euro dollar longs. I close out a New Zealand and Aussie dollar longs. That's it. Like, I'll wait. I'll wait for a cleaner setup and better technicals. Okay, oil. If oil was strongly up here in the high 70s, pushing 80 again, I think that there was more to this. But because we had just a big squeeze and it's now faded, almost 10% lower, I don't know. Just let this thing settle in. Maybe there's a swing trade opportunity here if we pull back in oil. Maybe I look at an oil futures trade, do like a 1111 or something like that, where I can have defined risk, but still, if price stays higher, then that's income. But I wouldn't be terribly surprised if this just continues to go up, squeeze, fade, and then work its way right back down. Would anybody be shocked to see oil do that? It's just like it's a one-off flare-up move, and it really doesn't do anything to change the structure. Like right there, I mean, look, it didn't close above there. It tested it and rejected it, right? So even here, lots of resistance. So if it fades back down, I wouldn't be shocked. So again, I'm just staying out of oil. Natural gas, kind of the same thing, just kind of mess around. I'm looking at some levels at the end of the month to dump. I've got a $17 call to see if that's going to get called away. I've got to go here for my URA. UNG, sorry, UNG. So June 27th, 17. I may roll this call. I may. And try to add another little bit to it. So maybe go out to like the first or second week of July. Otherwise, I'll just take the income. 5 by 17 gives me $12. My break even is around 10. So I'll make, $2 on 1, 2, 3, 4, 5, 6, 7, 8, 9. I'll make about $1,800. Nothing crazy. But that's just a safe income trade in case it's just more noise. What else? There's natural gas. Let's go gold. Gold close to the highs, but fading. Fine. If gold drops, I think dollar rallies and gold drops. Look for that correlation. Silver. Silver to me looks like a cleaner technical trade. We might backfill this little breakout around 35, maybe around 33.75. But to me, silver looks like a pretty good buy. I'm going to hold silver until at least $40. I think I'm trying to hold this thing to like 48 to $50. I do like this trade a lot. A lot. Bitcoin, messy, noisy, back up to 108. Maybe Bitcoin is trying to set up something like this. Okay. Which could be a couple things, right? This could be a wedge pattern that blows the highs off, and maybe this is accumulating to break and go to new highs. Okay. Or this is connect the lows here, and maybe we poke these highs, but this is setting up a rising wedge. So here, 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 and then we roll over. I'm not sure yet. I'm still going to dollar cost average into IBIT. I'm still going to have my Bitcoin exposure. I like the idea of us going to 120, 130 this year. I think we can get there. But if we pull back and allow like a $90,000 to $80,000 add-in position, I'll be okay with that too. It's going to hurt less, or hurt a little bit more, but it'd be a little bit more frustrating than just getting all-time highs with this thing running like crazy. But I just think we need to keep an eye on price action. Marco says, I'll be listening to recording while at the gym. If you haven't, could you talk about silver? I just talked about silver. So here it is. Silver, I like it. So I'm long, and the technical levels for me, 40, about $40.50, $41 would give me a measured move. So this would be my symmetry here. So we go low to high, higher low to higher high. So we've hit that symmetry. Okay. If we look at this low to high swing, this is a 618 extension around 4107. So for me, now that we've broken 36, we've hit symmetry. There might be a pullback in this like $35, $34 zone, but this to me is a bullish trade that has room to finish up into $41. From $41 back to maybe the $36, $35 handle, I'm still buying more silver, and I'm looking to take this up for a fifth wave. So if I were to label this low to high, pullback, low to high, okay, pullback, low to high. So I'm looking for a move up into like $47, $48 on silver. It's going to take a while. I don't think we ripped to $47, $48. But all-time highs in 2011, all-time highs in 1980, right around the $50 handle. I think for a metal, for a commodity, for something non-dollar related, for something that's a little bit more. I mean, it's industrial, so it's not really safe haven. It doesn't have to be anything crazy. It's also gold has been so good and so desired that silver's just way cheaper. So I think this part of it is just the catch-up trade. Good time to sell puts on LLY. Is it Eli Lilly? To sell puts. Sell puts is in what? Ownership? I mean, you want to sell puts on a stock that's $800? I don't like Eli Lilly that much. That's a lot to tie up. Now I could do a ratio spread, um, but it's still expensive, man. I'd prefer to see like a split on Eli Lilly if we did a 10-for-1 to make this an $80 stock. I'm way more interested in trading that for ownership's sake. That's a lot of money to tie up. If I looked at a put, and honestly, I would go so far out of the money here. I would just say like, end of the year, we're going to be at higher than $500. Okay, so what could I do on this? I could do a ratio spread on Eli Lilly. If I go out to the end of the year, December, January, strike prices. I mean, I should be able to get a pretty good penny for this if I did a ratio spread. I mean, I get $550, but I'm going to tie up. I mean, for my margin accounts, I think this one is actually a pretty good trade. There's about a 96% chance of profit. Could I have the cash to own it? Yes, 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 yes. Like I have the cash to own it on these accounts. So I do like the trade enough to take it. I just want you to be aware, like this is a very expensive trade. So I mean, we'd have to fall a ton. I do a 510 by 500. I mean, let me see what the buying power is on my PM accounts. I mean, a PM account only ties up about 1255, which is kind of crazy. It's so cheap on a PM account, but in real terms, I mean, it's essentially tying up 50 grand cash. So I need to make sure that I have the cash in order to hold this trade. Because if we see a big drop in Eli Lilly, this thing drops to $700. I'm actually on the hook for like $100 drawdown, right? $100 at 100 shares, like that's $10,000 in drawdowns if Eli Lilly takes a huge nosedive. Now it's in the options market, but point is, I mean, we better hold this level around 700, you know? So let me check one thing before I take that trade. I don't mind the seven. It's $550 of income. That's pretty high probability. But let me make sure that there's still some upside targets for Eli Lilly. So earnings forecasted to grow below estimated value. That's a good thing. 66 times. I mean, price to earnings is a bit pricey, but looking at fair value, over $300 higher. It's pretty expensive compared to its peers. I mean, Bristol Myers, Johnson & Johnson, Merck. The healthcare space is a little bit cheaper, way cheaper, in fact, than Eli Lilly. But for income's sake, I mean, again, probability of coming back to 500 and taking any assignment is pretty slim. If I did take assignment on the trade, let me go back to the options chain here. I would have the break even would be 490. So 500 assignment minus 10 minus 560. I mean, I'd own the shares at 484. From the highs down to 484, that's about a 50% discount, and the stock goes into December. So I don't mind the trade. I really don't. Now, I could be navigating some drawdowns in these accounts because if we drop, $50, it's a 5K drawdown, right? The probability of profit remains high. I just have to sit and, it's going to be adjusted. Now, one other way I could do this to kind of tighten this up would be, this is just a ratio spread. If I did, let's take one contract off here and then do another one. So this is like a 1-1-1. So I would create the debit spread and own the shares at 490 minus the 10 and still get almost $500 income. Yeah, I mean, it just allows me to lower the cost basis, increase the probability of profit, and buying power is a little bit less. So it's still basically on the hook for a $49,000 cash tie up, but these accounts can all handle it. So I think I'm going to take this trade. So Pete's asking, yeah, I mean, I haven't looked at it in a while because it has just had this exponential run. But as far as Ivy rank is okay. I'd like it to be higher, but it's not. We're not really in a sell zone. If it's stable, I mean, this is really the big Ozempic crowd. In my opinion, that's what made Eli Lilly so good. But I don't know, man. I mean, I'm looking at the trade this way. It's got a high probability to profit. Even if I had to own the shares and tie up almost 50 grand, 50 grand to then flip this thing for maybe 30 days. I mean, I can get $30 to $40 for a covered call. I think I've given myself plenty of wiggle room into at least protecting some shares. So I'm going to take this trade. Let me go here. So let me see if I can go back to trade. So went out to December. I'm just debating whether I do the 510 or I buy the 500 and sell the 490. I think I'll just do this one. Let me see if I can just get 500 bucks. So if I buy the 490, sell the 480, I only get $200. I do the 500 by 490, I get over 500 bucks. I'm going to try to take this trade. All right, so I'm going to try 525. 525. See if this will fill. 525 not filling. Try the mid at 523. Under the mid at 520. 19. I'll try to get. I don't want to take less than 500 bucks. If I'm going to put this type of money on the table, I'm not taking less than $5. 517, 516. Hopefully 515, 510, something like that will fill. So 515 not filling, 514. Just going to penny this thing down until it fills. Might be a lot of trades here to toggle. Nope. 510. Nope. 508. Come on, 505. What? All right. 502. If it doesn't fill at $5, I'm going to cancel it. Didn't fill at $5. Okay. So I'm going to cancel that trade for right now. I will say this on Eli Lilly. If we have a pullback, I'm going to set a chart alarm here around 710. Okay. And the reason why I'm going to set a chart alarm at 710 is if this goes down, I still like the trade around this $500 area, but I want to see a slightly higher IV so I can get more premium. So, I thought I'd get 500 bucks today. It didn't fill, so I'm going to cancel the trade. But if we drop down about 100 bucks a share, I'm going to try to go, out of the money. I think this $500 level is pretty good. I see this as a realistic level to test, though. I mean, honestly, either this stock is going to go sideways and go all the way back to all-time highs again and stay sideways, right? Like something like this, where we go all the way up to highs again and then be range bound, okay? Or because we had this monster run, this is roughly the halfway point. If you take this low, this high, this is equilibrium. So I could see the market coming back to $600 to $500, especially if you break this floor, it could drop fast. So it's not like this trade is without risk. And at an $800 stock that can maybe move 50 to 100 bucks or more, that's a lot of risk to potentially be aware of. Okay, so I'm going to keep a pin in this one. I like the trade, but a little bit higher IV, maybe a discounted price would offer this up a little bit better. 740, 760 call spread. That's good. Yeah, see if it goes higher. I like that. What's the time frame you recommend on entering in futures? What are you trying to do with it, Christian? If you're going long futures, the tricky part is seasonality-wise, like I have no idea where gold and silver want to go. I just think that this year, if we start to see like sideways dollar, weaker dollar, gold is probably going to catch bids still. Silver is a catch-up trade, but they're not big trend trades. So the safest trade for me in silver futures is like a defined risk, 1-1-1 trade where I maybe, go after like $1 or $2 of income, but I'm willing to risk about 500 bucks and put my stop loss and risk under the move, right? Like under the move. So if I go back to silver here, if we pull back, here's what I'd be looking for in silver. If we pull back, let's say to, 35 bucks, then most likely I'd structure a trade where as long as we stay above 32, then I make income. As opposed to, what do you do here? If you want to scalp silver, I think it's more liquid in gold. Yeah, I mean, going long, like, I mean, I trade SLV. SLV because I'm willing to own the underlying. That's a lot easier than trying to be right in futures. You don't own futures. So if you want to own anything, if you want like a plan B so you can, like repair this trade, I mean, selling a put at 30, selling a put at 31, selling a put at 32. I think silver is going to be higher in the next, 3, 6, 9, 12 months. So a naked put, willing to own shares at 32 to 31 to $30 is not that expensive. Price is likely going to come up here into the 40s. I mean, I would just sell a put, man. That's what I would prefer to do. That's a lot easier because even if I own the shares, I can then defend it, repair it, make money on it, just turn it into a core position. Because if I'm not right with direction, I'm not right with price action on silver futures, then it's a waste of trade. But I mean, I'm way more a believer that this is going higher. Therefore, I'm just trying to make trades that don't get in the way. So yeah, I mean, a pullback is fine, or puts, or sell puts. I mean, I wouldn't mind selling puts just because it's ownership. So all right, good on that. Okay, Bitcoin watching, MicroStrategy at 382, still watching. Ethereum, still think there's potential bull flag. I'm not in Ethereum, I'm just in Bitcoin, but this still has a good opportunity to catch up. Copper, I was in some small profit on copper. So this trades up, it's flat, it's break even. But I'll keep an eye on copper. If it comes back into this, this little 3-line area, that's a butterfly spread. Japanese yen, nothing yet. This is the inverse of the dollar yen. So I mentioned this morning in a live session. Big level to watch on dollar yen is, look, we're still in a July to August range from last year. When everything got disrupted during July to August last year, there's your high, there's your low. This low is still holding. This high is still up here. This is just a bunch of noise. Could this market work its way all the way back up here again? Yep. Could it go all the way back up to 160, 162? Maybe. But more than likely, this is probably the structure that sets up. Maybe this halfway cluster is still resistance, right? But the big trade to me is if we ever break the 140 floor, this thing's going to fall probably to 120. I don't know when that trade is, but I do know that if and when we get it, it's worth following along and trying to take some fast trends. We might have like a 3, 6, 9-month trend that you can follow the entire time for 2,000 pips. That to me is a big trade. It's one of the few examples and occasions where I would say it's worth trading the Japanese yen. It's worth trading for negative swap. It's worth, just the volatility is going to be nuts. If we go from 120 to 140, we could literally get there in like 30 days. So anyway, just tossing it out there. But that's the inverse. So if you go to 6J, which is Japanese yen futures, it's just the inverse of the dollar yen, like so. Right. So if Japanese yen futures breaks 0.007, measure the move. So you take, this low to high, you break that neckline, you measure that move out to symmetry. You're looking at a move all the way up to like 0.008 on Japanese yen futures. Okay. Would you rather trade Japanese yen futures to pay a one-time commission, or would you rather trade negative swap and hold, dollar yen? I'd rather trade futures. Okay. But anyway, we can get there. Keep an eye on that one. EWJ, still holding this one. This is some dollar cost allocation. We just hit closing bell. Bell went off. DAX is just off of recent highs. I'm looking for a pullback on the DAX to give me like a 30, 38, 50% pullback zone. This to me looks pretty good for a buy trade area. That'd be around 22.7 down to maybe the 21.5 area. FTSE right up towards those all-time highs. Another one with, after this big V bottom, maybe a pullback to 23 to 38% zone. That puts us around like 85, 8,600, maybe down to about 8,400. Argentina, maybe a pullback on the 200 moving average. China's looking okay. We've had a good run through June so far. Some of the related plays, Brazil's actually looking pretty good. Hopefully this chart alarm goes off. I like Brazil. This is a value play to me, kind of emerging markets, non-US. Latin America, same thing. Mag 7, I don't know. Be on the lookout. Be on the lookout for, maybe something like this. Let me go back to the workspace. To efficiently trade options. Marco, if you put an inquiry in with Tasty Trade, there's a lot of global traders that use Tasty Trade that trade options. It's not that difficult to trade options. I mean, honestly, a lot of the trades I take can be as little as 50 to 100 bucks. I trade a lot of on my margin account. I mean, I don't know what it is in Europe compared to me, but I mean, basically I get like a 2-to-1 when I'm in a margin account. I get a 3-to-1 in a portfolio margin, and I'm 1-to-1 with cash, and I manage a lot of IRAs. So I don't really get a ton of leverage in the market. I just tie up cash. But you can trade options and spreads like very low cost, very low cost. So anyway, I mean, in my Discord, there's a link for Tasty Trade. I've got an affiliate code, but I know Tasty has they have clients over the world. I mean, I've got clients in New Zealand, Australia that have Tasty Trade, all throughout Asia that have Tasty Trade. Europe, I know they're big in Europe. Canada, I don't think Tasty Trade is in Canada yet. I think it's like Quest Trade, Interactive Brokers. But anyway, in Europe, I think it's okay. Yeah, IBKR is pretty good in Europe. Yeah, IBKR is a big one. That's Interactive Brokers. They're a big one. Okay. Anyway, let me take a quick peek at Mag 7. Let's go Mags. Similar to the S&P and the Nasdaq, prices made slightly higher highs. Momentum is disagreeing, and we have some hidden bearish divergence on relative strength. So between Mags, S&P, Nasdaq, I see a lot of disagreement in price and momentum. Doesn't mean it has to turn right away. It just means I think we're on borrowed time. Okay, I think we're on borrowed time for some type of pullback. That's all. And I want to be ready for pullback so I can buy some more. Tasty Trade is a broker. This is my broker here. So Tasty Trade is the team that built Thinkorswim, which is now under Schwab, but they built this platform, I don't know, 12, 13 years ago, and they just made it leaner, meaner, faster, more intuitive, way easier to learn, way less learning curve here with all the trimmings, all the bells and whistles, all the inputs you would need to make a good trade. So I've had Tasty for a long time. I love their support. I've got a good relationship with them. So it's a broker, and they're a well-established broker. They're Deep Pockets. Apex Clearing is one of the bigger clearing houses in the world. Same one with, I think, Interactive Brokers use them as well, which is like $100 billion. So there's plenty of cash to make sure like your broker is liquid. And which regulations do you mean? I had no problem with them so far. With who? Oh, you're talking to Marco there. Interactive Brokers, they do allow, but they're very strict regulations. I don't know. It's probably just within your profile. Tasty, that's what I said, AG. Yeah, I think Tasty is not yet in Canada, but I know they're working on it. I mean, they want to be everywhere. They're very trader friendly. They want to be everywhere. They have super low commissions. They love traders. Yeah, it's good. It's good for business. All right. Christian says in Portugal, open up account with Tasty Trade US, easy and quick. Interactive Brokers, but trades are too expensive. I do hear that a lot for Interactive Brokers. I mean, look, I was with a hedge fund that used Interactive Brokers, and we could not get better fees. Our commissions it was pretty bad. On top of that, as an institution, you had to pay institutional enterprise fees. Data was ridiculous. I mean, I just maintained a retail side so I could have a live feed. It's crazy what they charge to be like enterprise or institutional when it's like a retail trader can still get real time data, for maybe a couple $1,000 account. So it is what it is. But I mean, I'm not trying to tell anybody where to go. I think that you do your homework. There are some brokers I think are better than others. Some brokers will treat you better as a trader than others. But obviously, not everyone has all the choices. But if you have choices, if you have options, then explore them. I want a broker that lets me trade and doesn't bother me. I want a broker that doesn't charge me high fees. I want a broker that I can trade and focus on the process of trading. I want as little disruption as possible. So anyway, minimum deposit. Yeah, it's just all right. That's just look. You can chat with a broker, and sometimes if they make it difficult, fine. There's other brokers that will not make your life more difficult. I mean, it's ridiculous that they're trying to set these high, strict standards of like you can't do this until you qualify this or your profile has to say a certain thing. Go find another broker. I mean, if you think about it in the world we're in right now, like the retail trading world has come so far in the last 5 years, let alone the last 20 years. At some point, I think that as retail traders continue to grow and show a demand for, wanting to trade frequently, then the things like pattern day trading will be a thing of the past. Restrictions and the ability to have, option permissions on trading futures and all this, like all these permissions will be probably given by demand. I mean, option trading has been just exponentially growing since COVID, since 2020, and fees are cheaper now. You basically trade stocks with zero commissions, crypto zero commissions, ETF zero commission, maybe an expense ratio if you're holding something in a fund or ETF. Options, I mean, I pay a one-time fee. I pay an entry only on all my trades. It's not that bad. I mean, I lose about 6 or 7% of my profits to the broker as far as commissions and fees, but that's the cost of doing business, and it's still low. It used to be like 15 to 20% when I traded currencies. So I'm saving a lot of money from that standpoint, and it's just part of what I have to do. But again, do your due diligence, dive into it, find the best broker that suits your style, suits your trading. Don't pay an arm and a leg. You don't want high fees. You just want a broker that lets you trade. Lets you trade with the permissions you're asking, lets you trade the instruments you want to trade. I want to trade the market up, down, sideways. I want to trade indexes, stocks, futures, Forex, crypto, trade options on everything. Why not? That's what I want. So I've got a broker that lets me do that. Okay. Real quick on the wrap up here. So key levels. Okay. Key levels today. 59.05 is the big gamma level I'm talking about by the end of the month. If we don't get there, if we don't roll over and get to 59.05 or 5900 and finish this out of the money, then we could have that melt up into the 6150, 6200 zone. That would be just the delta hedging to go on through the end of the month or quarter. But I think after that, the market does take a turn. If we poke those all-time highs, I think we turn. Okay. If we don't poke the all-time highs and we turn first, we dip to 5900, maybe 5800. And then we start rallying back up to try to get to all-time highs. Okay. I've got about 3.8 million under management right now. That's your question. Let's see here. Just a short hello. Thank you for communicating. Thanks, Joy. Appreciate that. Okay. This week's news, Fed on Wednesday. VIX expiration. We've got Juneteenth on Thursday, so no markets open, and then coming back on Friday to wrap up the week. So it'll be an interesting week with the Fed ahead. What is Powell going to say? Anything? The Fed's likely going to pause and not do anything, but does the market make a reaction? I'll be as interested as everyone else. I'm actually doing a trading battle this week with 8Cap. Nick Syke at A1 Trading is hosting, battling against Blake Morrow, a good friend of mine. And we're going to battle it out during FOMC on Wednesday. So you're all welcome to join that. I'll post that in my Discord channel and on my socials, so you can check that out. It'll be a fun live session. We're going to try to beat each other and who can make the most money for a couple of days. I think our deadline's end of day Friday. So, all right, I'll let you go. Thanks, everybody. Talk to you soon. Thanks. Bye. Ag, that should be. Let me see if I can get a recording for that. If I can get a recording, I'll post it. And actually, it's on my YouTube. If you go to my YouTube session, that should be recorded and posted already. YouTube.com/Chris Pulver. Go into live. And there it is. So this is the mid-year review. That's the entire session. Nick was finishing up for about maybe 20 minutes or so. And then I ran for about an hour-ish. So yeah, check that out. It's right there. Good stuff. So I did a live session this morning on mid-year review, just kind of talk top-down macro, what I'm doing, what my favorite strategies are, what I'm forecasting for the rest of the year, how I'm positioning. So if you'd like to, kind of pick a big picture analysis, there it is. Check it out. All right, thanks everybody. See you tomorrow.